Welcome to Frankly Speaking, the podcast on responsible business by Frank Bold, the European public interest law firm. I'm Richard Howitt, and after many years leading responsible business issues inside the European Parliament, I host our discussion of the latest developments on sustainable finance, sustainable business, and human rights. Today, the battleground in current discourse about whether increasing sustainability requirements is bad for business competitiveness. There have been many studies saying it's actually good business. But next week at the UN Annual Forum on Business and Human Rights, new research will be published, which is the first of its kind, which says respect for human rights is good for business. The study is published by the United Nations Development Programme, UNDP, and joining us to discuss it are co-authors Dr. Siniša Milatović, who manages UNDP's global programming on business and human rights, and by Olena Uvarova, business and human rights specialist at UNDP, as well as associate professor at Yaroslav Mudryi National Law University in Ukraine, and an old friend of this podcast. Siniša, welcome to Frankly Speaking.
Thank you, Richard, and it's a pleasure to be here.
And a warm welcome to you, Lena.
Thank you so much for having me back.
Well, you're actually with us in our first year, and without wishing to make you blush, you are the champion of business and human rights in Ukraine. And we talked to you 3 years ago about how challenging it was, but how possible it still is to promote the business and human rights agenda in Ukraine. So before we get on to the study, just say a little about what's happened in the meantime in terms of your work in Ukraine, because I know many of our listeners will be interested and will be wanting to support you in that.
Yes, thank you. Thank you very much for this question. First of all, it's such an honor to be here again after 3 years, and I'm really happy and proud of you to see how far this podcast has come. And I'm a regular listener of this podcast, and this series is doing an amazing job in shaping the business and human rights conversation and giving space to so many diverse voices. And responding to your question about Ukraine, very briefly, we still face a lack of policy coherence, not enough public demand, and still low awareness among companies. But at the same time, we do see significant positive movement after these 3 years. There is a government actor, the Ministry of Economy, Environment and Agriculture of Ukraine, and that's making real efforts to promote business and human rights, responsible business conduct in Ukraine. And just last month in October, UNDP and the ministry conducted the joint international conference on responsible business for recovery of Ukraine. However, we need a more coherent and more coordinated governmental approach. But the biggest change we have noticed during these 3 years, I would say, is a growing interest from businesses themselves. And there is also a much more clear understanding that responsible business conduct in times of crisis, in times of war, must include a vision of how the private sector contributes to responsible recovery. So, yeah, maybe it's too brief, but yeah, this is what we have for now.
Well, as we all know, I was also part of that conference, and I do congratulate you. And I congratulate Ukraine, because to be talking and thinking about the recovery and the reconstruction when the peace comes, and how business and human rights can be considered now, I thought was absolutely fabulous when, of course, your country is under attack day in, day out. So congratulations for that. And a lot of us are behind you.
Thank you so much.
The new study, it is a first of its kind. We're going to get into the detail, but Siniša, could you just give us some of the sort of headline findings so people can understand at a very broad level what the study shows?
Sure. Thanks, Richard. So what we set out to do is to examine the impact of companies' human rights performance on their financial performance. And our basic idea was to test whether the resources that are required to conduct human rights due diligence, as is often claimed by some policymakers and some businesses, impose a cost of competitiveness that essentially is an insurmountable barrier to corporate action on human rights. So to test whether this is true, what we did was to look at how the human rights performance of 235 companies over a 5-year period impacted their financial performance. So the key aspect here was to look at change in human rights performance and change in financial performance. And what we found was very interesting, because the headline finding, if you will, was that not only was there an absence of a financial trade-off, there was also clear evidence of tangible sort of financial benefits, especially when it comes to efficiency, that strengthen for companies that strengthen their human rights performance. And these results provide, in our view, clear evidence or compelling evidence that this fear of a cost to competitiveness is unfounded. Which
and
you could, yes.
Let's ask Lena if there was one takeaway from this report that you would want people to know, what would it be?
That human rights performance and financial performance is very much interconnected, and there is a positive connection between human rights performance and financial performance.
Okay.
This is, the main message.
Very clear. Now, before we drill down into some of those findings, there will be skeptical people, I am sure, listening, who are saying, well, is this methodology really robust enough? So let's just look at the methodology for some moments. How do you measure human rights performance?
No, I can go first. It is a challenge, really, to find a good methodology to measure human rights performance. And I believe we will have a lot of questions about understanding of human rights performance per se, and we already have these discussions around. But we took the methodology developed by World Benchmark Alliance and well-known corporate human rights benchmark, and I believe that many of frankly speaking audience know this methodology. So corporate human rights benchmark, they started in 2017 to publish every year the scores, human rights scores for different companies, and they measure based on many elements. They measure human rights policies, processes, and practices. And they are doing this over years. And of course, the problem for us was that the methodology was changed in 2021, but still World Benchmark Alliance, they provided us with 96 elements. These elements were the same during these 5 years. So we took these 96 elements. These elements are divided into 6 measurement areas, and these areas are human rights, policies, policy commitments, governance, and board level accountability, embedding respect for human rights due diligence, remedy, and human rights practices. So basically, we measured human rights performance based on these elements within these 6 measurement areas. And for us, having this particular methodology was very important because we also did a meta-analysis of other studies, but all these studies took ESG or corporate social responsibility and tried to find the connection between ESG or CSR with financial performance, but corporate human rights benchmark gave us the possibility, and to indicate this connection based on UN guiding principles aligned human rights performance. And
that's very, very clear.
Yeah.
Siniša, it's probably a bit easier to explain, but in terms of financial performance of the companies, how did you measure that?
Yeah, we looked at two essential elements, which one being account-based indicators, so essentially their profitability, if you will. And for that, we used three key metrics, which include cash flow, operational margins, and efficiency, return on assets. And then when it comes to the second element, we looked at how investors value these companies. So what we looked at was three elements that are used in sort of standard literature, which are so-called Tobin's Q. This is intangible value. It's a metric that compares a company's market value to the replacement cost of its tangible assets. So essentially, under the competitiveness cost hypothesis, what we have is that investors would view human rights due diligence as a liability that erodes value. The second one is a valuation multiple. So again, how investors look at companies. This metric looks at the market's expectations for a company's future growth. So essentially, a higher multiple would indicate that investors are willing to pay more for each dollar of a company's earnings. And according to this hypothesis, again, that we have, investors would apply a lower multiple to firms with strong human rights performance because they would think that future earnings will be depressed by all the costs of human rights due diligence. And then finally, the third metric of investor valuation is total shareholder return, which is the kind of ultimate measure of shareholder value because it combines share price appreciation and dividends. So these three investor sort of metrics and the three account-based metrics provided us with a very strong framework for measuring their financial performance.
Okay, again, really clear. And some specialists listening to this will think that mentioning Tobin's Q in this podcast is a complete victory. But it's difficult, I think, for anyone to disagree that this is a really thorough and robust study with a very deep methodology. Let's go into those financial results that you found first, and let's divide it. We'll come back to the investor valuations, but just on financial performance, don't mind which of you starts. What were your actual findings?
Well, I'll start, Richard. I mean, the most sort of notable result, and this really is a kind of a highlight, is that there's a positive and statistically significant link, which is key, between human rights improvements and the return on assets. So the return on assets, again, just to sort of for those who are not aware, is essentially asset efficiency. So it measures how efficiently a company uses its assets. And essentially, if a company was, it bakes in, it accounts for cost of human rights due diligence because it looks at net income, and net income is calculated after all operating costs and administrative expenses have been deducted. So it means that every cent that you spend as a company of human rights due diligence, from salaries, trainings, audits, and so on, is already accounted for. So with that in mind, the key highlight here, the key finding is that as a company improves in terms of human rights, it also improves in terms of return on assets. And essentially, for every 10 points that a company improves according to the corporate human rights benchmark scale, it improves 1.7 points when it comes to its return on assets. And this, by the way, is even more true for companies that start off more slowly on human rights. So companies that are worse performers, as they tend to improve on human rights, they improve by 4.7 points on the return on asset scale. And we saw numerous examples of that. Additionally,
just on that last point,
yes,
maybe Olena, in the report, you say laggards have the most to gain, the point that Siniša has just described. And I think there'll be a lot of people in companies listening who perhaps haven't got human rights policies now and human rights approaches, who will be very interested to see they've got most to gain. It's not the big companies that have always been doing this, or to at least some degree, that have most to gain. That's a surprising result. What's going on there?
No, yeah, so but no, basically we ran our analysis through different through different criteria, and also we decided after also several rounds of discussions to check if the results are relevant for different companies, and that's why we divided the sample of companies into different groups. Those companies which had the lower scores on corporate human rights benchmark 5 years ago, and so in the first year of the benchmark, and then they improved their scores the most. And basically, these companies showed that their financial performance is much better than and correlation between their financial performance and human rights performance is much more stronger. And of course, we still need to do research about what kind of reasons are behind of these results, and we can just make our assumption that the first steps to improve human rights policies, practices, processes could be a little bit easier and maybe more cost effective than next steps, which could require more investments from companies, and which could be more expensive, and of course to make next steps could be just could require more efforts from companies. But also we tested
those first steps then really do pay back. Sorry to drive us on, but we've got a lot to cover. Siniša, we've covered then profitability and in terms of the operational side of the company, but also you're talking about investor valuation. Tell us a bit about the results on that.
Yes, well, the results there are that there is a neutral to positive, if you will, market reaction. So we looked at these three indicators that I mentioned: Tobin's Q, valuation multiples, and total shareholder return. And we found that as corporate human rights performance improves, it didn't result in lower market valuations. These were mostly positive in our results. They were not statistically significant enough for us to report them as highlight findings. But one thing is for certain, which is that investors did not tend to devalue, for lack of a better term, or punish firms for so-called wasteful social spending. So they did not perceive improved human rights performance as something that they should punish companies for.
If any investor wants to come on and say that they should, you've got an open invitation. But all of the investors that are going to be at the annual forum next week, they would double underline that, and many take it very seriously. I think it's important for us to say that. So in the report, you say that the competitiveness argument against companies following human rights is neutralized, is what you say, and that instead that human rights should be treated as a strategic advantage. Now, sustainability people, I think, would identify with that. I've heard that said in the sustainability field many times, but you're saying it in the human rights field for, I think, the first time. So could one of you explain what you mean by that?
Yeah, maybe also I can go first. First of all, we have a lot of discussions around competitiveness these days, and our study provides the evidence that human rights due diligence and in general responsible business practices should be considered as a part sustainable competitiveness, and basically we call to reconsider the concept of competitiveness in general, and it's not very much a new idea, because basically we do the same when we talk about macroeconomic policy, and when we talk about national competitiveness and sustainability, and many of the world's the most competitive economies, they are also top performance on sustainability metrics, and we need to consider competitiveness and sustainability as a complementary but not contradictory concepts. And our study just provide evidences that it should be like this, and fears of high costs and regulatory burdens, they basically they don't have evidence to be based on. So this is the key idea related to sustainable competitiveness.
Can I come in, Richard and Lena, on this, just to add one point? We're clearly not saying that there are no costs associated with conducting human rights due diligence. I mean, that's clear. There are costs, and would be, disingenuous to pretend otherwise. But this study looks at a 5-year period, because this is the data that was available to us. We'd love, and we will, and we can maybe talk about that later, conduct, follow-up studies over longer periods of time. The benefits become apparent over a slightly longer period of time. So when it comes to the competitiveness argument, clearly, what stares you in the face if you're a company immediately are the costs. And we know, maybe they're scary for some companies and so on. But what does become apparent over time, and as I said, we'll keep monitoring and tracking how this unfolds, and for hopefully a bigger sample of companies as well, is that the benefits become apparent the longer you go on. So, for a variety of reasons that are well known, but it seems clear that, if you have introduced, there are some upfront costs immediately, there are some, costs to human rights due diligence, and yet over time, the benefits kick in, and therefore, your competitiveness should be sort of, if you're a company, it'd be worth reassessing what it means to be competitive on the grounds of the study.
Do you think the people who need to hear this are really listening? Because it's such a hot debate at the moment in Europe, but also broadly, and we'll perhaps come back to that. And do you think in business minds are already made up, and this sort of research will just be discounted or ignored? How do you imagine that these results can get through to the people who most need to see them?
Well, maybe I can come in, and then Lena, if you have thoughts, please come in as well. But I would say that there's two principal groups who need to hear this. One are policymakers, and two are businesses themselves. We've had already both businesses and policymakers reach out to us and say, okay, could you please, provide us with, more data? This is the sort of data that we need. So there are definitely policymakers willing to listen. I'm not going to pretend that, somebody's mind isn't made up. Clearly, there are a lot of people who've come down on one or other side of this debate already. But we heard from businesses, consultancies, lawyers who act for businesses, who said to us, yes, this is what we need. We need this sort of quantitative data. The arguments that have already been made and been made for years about why, being responsible is good financially, worker satisfaction and so on, have already been made. And they're good arguments. This isn't to say that they're not good. It's just the sort of data and evidence that's provided for them isn't necessarily the kind of data that's cutting through with businesses especially. So I think some people's minds are made up. On the other hand, we have definitely seen, even in this short period of time since, we mentioned the study, that there's an openness from policymakers and businesses to say, okay, provide us with this kind of data. We need more of it, because it might help sway. And, frankly speaking, sorry, this is an effort to get people to listen and to possibly change their minds.
And let's now ask that in specifically about the Corporate Sustainability Due Diligence Directive, CSDDD, in Europe, which is part of these omnibus discussions that continue. What would your message, again, either please come in, what would your message be to policymakers about what this research shows that they need to know as they determine the final shape of CSDDD?
Again, I think that the key message is that all decisions of policymakers should be based on evidence, and we do see the lack of evidence that this kind of regulation and this kind of practices from businesses could impact in negative way competitiveness of companies. But this is the key argument of those who are trying to push back corporate sustainability due diligence directive. So we really want to call policymakers and those who are trying to make this statement about competitiveness and human rights due diligence to look at evidences and to take these evidences into consideration, and to see that, there is a clear positive correlation between human rights performance and financial performance for companies and for their competitiveness. And also just to add one more thing, that because of the methodology of corporate human rights benchmark, our study is about large companies, so those companies which would be covered by the scope of human rights due diligence directive. So basically this is about these companies.
Do you have anything to add? Because of course it's not the role for the UNDP to tell Europe what to do. On the other hand, you are playing a leading role throughout the world. I've seen it firsthand in Asia, where you're really making a difference on business and human rights. What's your message from the outside to the Europeans on that?
Well, exactly as you said, first of all, this is not a Europe-only issue. However, the debate is currently, at the time of recording, at its height in Europe, and I'm sure it's going to have repercussions for the rest of the world. I'd say the following. For us, the starting point are the UN Guiding Principles. We think companies should respect human rights no matter the cost, because, that is an expectation. At the same time, we can't pretend that this isn't an argument. Since I've been in business human rights, and I'm sure since you have it as well, we've seen an ongoing, more or less consistent upward trajectory of the business and human rights agenda, more and more uptake by governments, more and more uptake by businesses, and so on. And this is the first time in the last year, let's say a year and a half, that we've experienced sort of blowback on that scale. So evidence is important. Again, human rights should be respected regardless of the cost, but evidence is important. Our message would be to reimagine, if you will, competitiveness, but not, when I say reimagine, I mean taking into account longer time frames, taking into account this kind of data that we want to produce and we are producing, taking into account also positive societal externalities, which clearly are not immediately accounted for and which we plan to study as well. There are studies out there. There are numerous studies showing the link between improved human rights performance and economic development at national level. So how do we bring that back to individual corporate level, which we'd like to? So our message would be that, essentially human rights due diligence is a responsibility, but that it's not as costly as it's made out to be. And in fact, it may well be a profitable exercise when all is said and done.
And just a quick question. I know there'll be listeners who saying, is this correlation or is it causation? Is it a happy coincidence these two come together, or is there actually a link between them? What are your preliminary thoughts on that?
Well, our methodology was designed in such a way to, ensure that human rights performance, we looked at the way human rights performance at least precedes financial performance, because we measured human rights performance from 2017 to 2022 and financial performance from 2019 to 2024. So that essentially precludes the possibility that better companies who are doing well financially are spending more in human rights. That the methodology doesn't allow for that. Now, does it prove causation exactly? That's a difficult thing to do. What we did was we controlled for a number of other variables, such as firm size, industry, the region they come from, and so on. And from those variables, we found that the human rights performance accounted for about 13% of the financial performance, which is comparable if you look at other studies to, for instance, the training of management, debt to finance ratio, debt to capital ratio, and so on. There's never going to be one independent variable, one indicator, one factor that explains corporate financial performance. But this actually, the study shows that corporate human rights performance has a substantive part to play in corporate financial performance. Obviously, we'd love to do more, but for now, we think it's a fairly robust sort of finding.
Lena, I've got to ask this question. I'm a champion of business and human rights. People know that, so I'm not going to disguise it. But is this you, me, Siniša, who are the champions and people like us? Is this our wishful thinking? And we're creating conclusions that we want to see. And should we really be doing it? Should we be saying that there's a business case for human rights? Surely the case for human rights is to do the right thing and not to do the wrong thing. You, in your report, to give you credit, you talk about not instrumentalizing these findings. So I think that's it's not just me saying it, you're saying it yourselves. But for our listeners, are we just desperately trying to find an argument to get human rights looked at and thought about seriously, where with some with whom we failed to win the argument?
First of all, I totally agree, and I'm very much for this idea that human rights should be respected, and it shouldn't be just because of financial interest and so on. But at the same time, for me, for example, as a scholar, it's also very interesting just to respond to the question, just to ask ourselves this question: what is the correlation between financial performance, human rights performance? And again, we see a lot of studies and very serious studies on macro level, and this is this question about what should go first, democracy or economic development, and what is causation, correlation between democratic development and economic development. So these questions were asked, and many tries to respond to this question were done, and why we should stay beyond of this logic. I think that it's very interesting to just even from purely academic perspective to respond to this question and to know the response on this question. So yeah, I think that we should ask questions, even if these questions could be provocative, but still we need to remember that human rights should be respected even if it's not profitable, but we see that it's even profitable.
Siniša, do you want to add anything?
Yeah, just to come in very quickly, a sort of personal reflection, if you will, which is I wanted to initiate this study 4 or 5 years ago in UNDP, and we'd have discussions in-house with the global lead on business human rights, Livia Sarandrea, who many of our listeners might know. And we'd always have a bit of a back and forth, is now the right time? And what happens if the results are quote unquote bad? Meaning what happens if human rights performance is not profitable? So there was a bit of trepidation in doing the study. And I'm not going to say that future follow-up studies that look at certain sectors, won't necessarily do that. Now, in terms of these results, they do show what they show, which is that, human rights performance is profitable. And also I think it would be a kind of head in the sand approach if we were to pretend that there wasn't this blowback that I mentioned earlier. So if there was an ongoing ever, upward trajectory of the business human rights agenda, then maybe, yes, this will be a valid argument that we shouldn't look at this. But on the other hand, I think at the way things stand now, this sort of evidence is good, welcome, and it enables an open and honest conversation about what is the cost of human rights and who should bear it.
In this podcast, we've heard that the methodology shows 96 different elements about the human rights performance of the company. It's looked at finances both in terms of operational profitability and investor valuation. And the findings are that a 10-point increase in the company's improvement in human rights, according to the corporate human rights benchmark, leads to 1.7% increase in profitability on average. But for the laggards, the ones that are only just starting, perhaps some listening to this podcast, up to 4.7%. The study also shows that the longer you go at doing it, the more the benefits come. And the feedback that's come from investors and policymakers is this is the data we need, and that whether it's correlation or causation is always going to be studied. But the methodology used in this study shows that good human rights performance has a substantive part to play in better financial performance of the company. Human rights are profitable, Siniša said in that last entry. Lena said that the upward trajectory of business and human rights is supported by results such as these. We have run out of time now, so thank you very much to Dr. Siniša Milatović and to Olena Uvarova for joining us today. Thank you.
Thank you. Thank you so much for having us.
Thank you very much, Richard.
The study is published on the United Nations Development Programme UNDP website. I invite people to have a look at it for yourselves. You've been listening to Frankly Speaking, the Frank Bold podcast on responsible business. Find out more about Frank Bold's Responsible Companies section on our website, and please give us your feedback on our LinkedIn page or by commenting via your podcast provider, where we hope you will share the conversation and give the podcast a 5-star rating. And remember, you can watch us on our YouTube channel too. Thank you again to Lena and to Siniša for joining us, and to all of you for listening. Do join us next time, and goodbye.